Hello and welcome back to another episode of Wealth and Christ Show, a show where we inspire the masses to become financially free without compromising their faith. I'm your host, Dami, and today we'll be having a conversation about how to invest, specifically how to invest in the stock market. As many of you guys may have goals this year um, to grow your money, to increase your network. One of the best way to go about increasing your network to grow your money is by investing in the stock market. And before I go into a quick spill on how to go about investing, I definitely want to say this is not financial advice. These are just my opinions on how you can go about investing in the stock market. So investing in the stock market is, like I mentioned, is a great tool to build wealth, to increase your network, to make extra income. And as simple as it is to invest in the stock market, and as easy as it is today, thanks to different platforms such as Robinhood, um, where you can basically invest with as little as $1 into a stock, into ETF, is like there's really not much of an excuse, one can have in regards to not wanting to invest in the stock market. Of course, it's important to have education. I'm hoping, through this next few minutes that you guys will be with me, I'm able to give you guys a better understanding on how to go about investing in the stock market. So the stock market, in a sense, is a market, where you can buy into different companies. You can take ownership of different companies. Some of your favorite companies such as McDonald's, Apple, Facebook, Meta, Tesla, Nike, Home Depot, Nvidia, and so many more. The stock market gives you opportunity to take ownership in this company. And with taking ownership, you're able to grow as a company grow. You're able to get wealthier as a company get wealthier. At the same time, you do take losses. As a company decline and you're investing in a company that decline, you also face the possibility of declining. And and that's pretty much what the stock market is in simple terms. Before you invest in anything, it's important that you have the right mindset. I want to say investing should be a long-term game, and not a quick scheme to get rich. Yes, it's possible for you to get wealthy or build a significant amount of money through the stock market in the short term, but if you have your focus long term, you're able to grow and understand the stock market much better compared to if you're giving yourself a short amount of time to make X amount of dollars. And once you have the mindset that you understand this is going to be a long-term thing to build wealth, to give you the freedom to do the things that you want to do at your own time, the next thing is identifying how much do you want to start with. Like I mentioned, platforms like Robinhood has made it easy where you can invest as little as $1. Likewise, as Cash App, you can invest as little as $1, or even Acorn, where you can invest as little as $1. So you can start as little as 1, 10, 15, 20, 200, 1,000, whatever you're comfortable with, whatever you're comfortable taking a risk on. And I will say here, we all have different risks. My risk is different from your risk. The amount of money I'm willing to risk, and I'll be okay, to lose if a company or ETF that I'm invested in, was supposed to decline, is what you should start off with. Now is for you to decide what brokerage. And there's multiple brokerage that you can start from. There's Fidelity, there's Webull, there's Robinhood. There's so many different platforms that you can get started and start investing on. And once you have come to that, this is where things get fun. I often suggest people start investing into companies, that they like, that they're constantly buying from. So you're constantly ordering things from Amazon. It may make sense for you to buy Amazon stocks, a stock or two. You should buy into things that you're currently using, because you currently using such a company's product means that you believe in this company, you find value in this company. You find value in this company. That's the easiest way to go about investing. Buy into companies that you support, that you use their product. And from there, you're building wealth. You learn about the company, you learn about the revenue. You being an owner, you make money with them as well. You lose money with them. Well, everyone's goal, I believe, if you invest in the stock market, is to make money, or just invest in any asset class, is to make money. So, keeping that in mind, you're more mindful. You're really doing research. You're reading articles. You're reading the investors' letters the company send to you to understand what's going on, what to expect each quarter to quarter or year to year. To add on, let's say you know of a company, or you know of an idea that you believe will be the future, be the future in the next 10 to 15 years. There's possibility that there's a company on the stock market that you can buy ownership in to start just to buy ownership in, that's focusing on this idea or this innovation that you believe that's going to change the world, that's going to take the world to the next level, is going to provide value to society and continue to move us forward. You can buy ownership in that. And the benefit of buying into stocks like that is that you're able to, over time, you're able to gain, gain, you're able to gain a great amount of wealth. When you're buying into companies that are fairly new, that they're introducing an idea or innovation that you, and as well as the company, believe will change society, add value to society. But for one reason, time has to take place. Time hasn't caught up to where they are or where they're thinking. And when time does catch up, you're able to benefit from this stock greatly, because the stock will have went up massively, and you were able to sell great at a great gain, and you were able to, yeah, you'd be happy. You know, Imagine being able to buy into Apple 10 years ago, or Facebook 10 years ago, or Nvidia 10 years ago, because you agree with their thought process, you agree with the idea, the innovation that they were trying to bring, the value that they were trying to bring. You'll be up significantly. And that's another way to invest in the stock market. Buy into companies that you believe, you know, are the future, of society. It's going to add value to society in the future. The idea or innovation is going to add value to society in the future. Let's say you don't want to buy into a company where you consume their product. Let's say you don't want to buy into a company where you believe that they have an idea of the future, for the future, that can benefit society greatly. You can buy into what is known as an ETF. An ETF stands for Exchange Traded Fund. So you can think of it as a basket of stocks that you can buy. As a basket, you can think of it as a basket full of different stocks. So in this basket, you'll be able to have you have exposure to Facebook, which is known as Meta, Apple, Disney, Nike, Home Depot, Nvidia, Tesla, and so on, so many different companies, by just buying this one specific basket. And I often suggest this route because it allows you to, one, get exposed to different companies. The a benchmark index that's often used is the S&P 500. And the S&P 500, which stands for the Standard and Poor 500, which annually does about 8 to 10%. You can buy shares of ETFs that mirrors or track the S&P 500, such as SPY, VOO, and there's many others that track SPY, that track the S&P 500. Or if you want something a little bit more different, you can buy into an ETF that tracks the Nasdaq, which is another index, and it has done greatly in the past few years. I don't know the exact annual yield, but it has done great as well. And you can buy into things such as QQQ. or QQM, which tracks the NASDAQ. And just to give you a better understanding, the S&P 500 are the 5 largest companies in America that you're able to get exposure to. And the NASDAQ contains many large companies likewise, but specifically the NASDAQ focus has a very strong concentration in technology companies such as Apple, such as Microsoft, such as Google, such as Tesla, and many other tech startup and growth companies. But this is a great way, investing into ETFs to limit your risk as well to limit your exposure. And this way you continue to grow money at a more, I'll say, more efficient way. And, like for example, buying an ETF, if Apple was supposed to go down 10% in the ETF base, depending on what percent of the ETF is allocated in Apple, you may only go down 2% or 3%. So it all depends on the allocation of the ETF, and every ETF is allocated differently. Where the 10 top stocks in the ETF is all allocated into tech, or the 10 top stocks are all allocated into finance. So it depends on what exactly you want. What kind of ETF are you looking for? Because you can invest into ETF specifically for different sectors: financial, health, so many things. That you can invest into. And as you build understanding of how these different companies are being added to ETF, you can then venture out and, buy to get more exposure to the specific company. If you believe in their message, you believe in their ideology. And from there, you can continue to learn. There's so many other things you can do from. And I want to end here because this is just a quick introduction on how you can get started investing. And the important key that I want to highlight is that it's something you have to continue to do. Investing only works when you're consistent, because you're consistent, you put it in money, you're consistent, you learn it. It just then starts to compound. This is where you're able to go from 10% growth to 20% growth to 30% to 40% to 50% and so on. Your wins get better. You start to win more trades. You start to pick better companies, pick better ETF. And as a result, your your finance continues to grow. And this is just like a simple introduction into how you can get started into investing. Get started into investing because the time in the market beats time in the market. Oftentimes people don't want to get into any asset class, so they're trying to time when there'll be a pullback. If you want to invest $100, you can allocate, $1,000. If you want to invest $1,000, you can go about investing it over a 10-month period into Pacific stock, into a Pacific ETF of your choice, compared to just putting it all at once. So that way you can able to navigate the stock market, in the volatility that comes with investing in the stock market a little bit much better. There's 3 things that I want to highlight, that really determines how successful you can be in the stock market. 1, how much you're investing. 2, how long you're staying in investment. And 3, when did you buy this investment? Like I stated earlier, time in the market beats time in the market. And so this is scripture I will leave you guys off with. Ecclesiastes 11:6, and it states, "In the morning sow your seed, and in the morning sow your seed, and at evening withhold not your hand, for you do not know which will prosper, this or that, whether both alike will be good." So this scripture is just emphasizing, just invest, continue to invest, because you don't know which of your investment, which is an ETF or which is a stock, that you don't know for sure which of this is going to transform your life. Investing is a long-term game. Building wealth takes time and does not happen overnight. As always, I hope this continues to bless you guys. I hope this encourage you guys in your faith. And I look forward to seeing you guys next week. Stay blessed.